Hello, everybody, and welcome to part three of our lecture series on financial statements. Sorry, this is step 7 of the accounting cycle, which is financial statements. And there are 3 financial statements that we're going to be working on in this lecture series, which is the income statement, the statement of retained earnings, and the balance sheet. We did the income statement in part 1, statement of retained earnings in part 2. Now it's time to move on to part 3, which is statement 3, which is the balance sheet. And what I have here, I put little icons next to each of the statements to kind of indicate what they are. And this balance sheet, I have a little camera here. I don't know if you guys even know what a camera like this looks like because you're so used to your cell phone cameras. But this is a picture of a camera, and it's taking a snapshot of a picture. And I'll explain what that has to do with the balance sheet in just a moment. So, the reason I say use this icon of a camera taking a snapshot is the balance sheet is a snapshot showing the company's assets, liabilities, and equity at a specific point in time. Okay, so when I talked about the date of financial statements, the first two, the income statement and the statement of retained earnings, were for a period of time because they were measuring activity or changes. But the balance sheet is not a period of time, it is a point in time. Okay, it tells me how much cash do I have at the end of the month, or how much do I owe at the end of the month, or at the end of the year. Okay. And I think of the balance sheet as really accounting nouns, things. Okay. And you measure these things really at a point in time, right? So you have cash, and your cash can be high and it can be low, but your cash is going to go up and down, and all of your assets and liabilities are going to be going up and down all period long. But really, the balance sheet is just showing, well, what did we have at the end? Okay, so just think of it like your bank statement. What did I have at the end of the month? Okay, and really, what the balance sheet does is it shows the users of financial statements, because remember, the whole purpose of financial statements is to be able to communicate information efficiently, concisely, in an easy to read format. And what the balance sheet does is it shows very quickly how much a company owns, how much a company owes, which is liabilities, and how much the owners can claim. Okay, so how much a company owns, that's assets. How much a company owes, that's liabilities, and how much the owners can claim as of the end of the accounting period. Okay, so the format of a balance sheet is, first we calculate all of our assets, and then we calculate our total liabilities and our total equity. But equity, we really condense down to only 2 accounts, okay, which are common stock, which is what the owners put in, and retained earnings, which is all of the money that the business made, right? Because remember, I told you all along what the owners can claim. One of the benefits of ownership is that they can claim what they put in and any additional money that the business made that stays in the business, okay? And then ultimately, the reason why we call it a balance sheet is because the assets must equal the total liabilities and equity. Okay, and that will show us that it balances. So when you're doing your balance sheet, you need to make sure that your assets equal your liabilities and equity, and then that will tell you that you probably did it right. Not 100%, because you could have, misclassified things in between, but if all your assets equals your liabilities and equity, you know that you're probably most likely on the right track. Okay, so let me show you what the balance sheet looks like with numbers in it. Okay, so here you see the balance sheet. And again, we have that same, this is again is on page 20 of your textbook. We have the name of the company, the name of the statement, which is the balance sheet, and we have the date. And as you'll notice here, the date is one specific point in time, the end of the month or the end of the year. And that's different than here in the statement of retained earnings, which says for the month ended December 31st, 2017, because it's for a period of time. It's the changes over time, but not this. Balance sheet just tells us what did we have at the end. And that's why you see just one point in time here. Okay? And then, like I said, we have assets. And they list out in detail all of the assets. And then they do a sum of the total assets. And they underline that number because that's an important number. Because remember, the balance sheet is going to tell us very quickly and concisely some important information. And one of the pieces of information it tells us is how much the company owns. And that number, if you want to know how much the company owns, you just look right here for total assets for the double underline. So in the financial statements, anytime you see a double underline, that means that's an important number that we're going to want to draw our eye to right away to answer those questions quickly. Okay? So right now I know, okay, our company owns this much. Okay? Then you see on the other side of the balance sheet, the other side of the accounting equation. So the balance sheet kind of mimics the accounting equation, right? Your assets equal your liabilities and equity. Now I want to make a quick point here that and actually oftentimes you'll see a balance sheet that rather than listing the liabilities and equity in a second column on the side, they'll just list it right underneath the assets. Doesn't matter whether it's all, in one column or if it's in two columns like this with assets in one column and liabilities and equity in the other column. It doesn't matter. It's all giving you the same information. Some show it side by side and some show it just in one long column, but the information is the same. Okay, so what we have here is the other side of the balance sheet or the other side of the accounting equation is your liabilities, and they list out the liabilities and they sum them up. And then the equity, and they list out the equity, but they only have two accounts now. Common stock, which is what the owners put in, and retained earnings, which is all the money the business made that the owners can claim that's still in the business. Okay? And we get that number of retained earnings from our bridge statement. Our bridge statement is right here of ending retained earnings as of December 31st, 2017. And you notice our balance sheet has that same date, December 31st, 2017. So our retained earnings, we're going to pull the ending retained earnings for the dates matching up, right? The dates here match up. So this is the number we're going to use, and we're going to put it here in our the equity section of our balance sheet. And the total equity is $34,200. So like I said, this statement tells us important information. Now, in addition to telling us what the business owns, it also tells us how much the business owes as of the end of the month, as well as how much the owners can claim as of the end of the month. And again, the last thing we want to do is we want to prove that our balance sheet balances. So we sum up our total liabilities and equity. So that's this number here and this number here. And then we make sure that our total assets equal our total liabilities and equity. And so this number here is double underlined to show this is important because it's proving that our balance sheet balances. Okay. Now, I want to make it clear to you guys that these financial statements include every single piece of information from the adjusted trial balance, okay? But it shows it in a slightly different different places, okay? So what you'll see is the income statement here only includes the revenues and expense accounts, okay? And what the income statement does is it rolls up or summarizes all of those accounts into this one number that is net income, okay? So all revenues and expenses are summarized and condensed into this number called net income. Net income then rolls down into the statement of retained earnings, okay? And now the statement of retained earnings then includes all revenue and expense accounts, which are rolled up into here, net income, as well as the dividends. So this number here, retained earnings, summarizes all of these accounts from the trial balance, okay? And now this number here, this retained earnings, goes here to the balance sheet. So the balance sheet includes all of the asset accounts, all of the liabilities accounts, and really all of the equity accounts. Even though you only see two here, which is common stock and retained earnings, just know that retained earnings is a condensed summary of all of the other equity accounts, all of the revenues, all of the expenses that make up net income, and all of the dividends. They're all condensed in there. So really, this balance sheet reflects every single account from the adjusted trial balance. It's just that they're all the equity accounts, besides common stock, are condensed into this one number because retained earnings is that. It's all the revenues, all of the expenses of the business over the entire life of the business, minus any of that has been given back to the owners. Okay? So just as a quick recap, we have done 3 financial statements: the income statement, the statement of retained earnings, and the balance sheet. And each one of these items communicates important information that we need to know. The income statement tells us how much money we made for a period of time, whether that's a month or a year. The statement of retained earnings is a bridge that shows us any changes in the retained earnings, or the total monies that a business made and held in the business over the entire life of the business. And then the balance sheet is a snapshot of all of the assets, liabilities, and equity at a point in time. So how much the business owns, how much the business owes, and how much the owners can claim. And like I said, they're all interrelated through the concept of articulation. One leads to the next, leads to the next. Okay, so that concludes our lecture series on through Accounting Cycle Step 7 on the financial statements. And hopefully this will help you to better understand this process. So when you come to class this week, we'll be able to move forward and actually you'll get some practice preparing financial statements. All right, see you guys then.